Today's Tuesday, May 28th, and this is a chart review on a position I just took a little while ago involving the SPDR S&P 500 ETF, ticker symbol SPY. And as of the time of this recording, the ETF is quoted at $529.21. And since trading started this morning, it's currently down 6 cents. So this is the 7-day 10,000 tick chart, which means each candlestick represents 10,000 trades, consisting of both the buy side and sell side. This is the current candlestick right here. And as of right now, there's been 4,642 trades having been executed so far. So whenever this hits 10,000 trades, a new candlestick will be created right here in the bottom right corner. So from this 7-day look back, we can see that the 7-day high was back on May 23rd, hitting $534. And in the same trading session, the ETF hit a 7-day low of $524. And since price hit this low, it's been gradually working its way back to the upside, possibly on its way to retest this resistance level, and eventual possible retest of the 7-day high, $534. So since hitting this low, it appears that the current market structure is inside this ascending channel. So price may continue working its way to the upside. However, while this pattern at the lower time frame or immediate short-term period looks bullish, going back 7 days, I'm interpreting this as a pattern inside a descending channel. So it appears, I think the overall trend is to the downside. I think price is going to get rejected here because if this purple band, this lower purple support level, continues to hold as a strong support level that price has been respecting, it has to contend against a strong descending yellow resistance level, because right here, there's this crossover where the purple support level crosses over a strong resistance level. So I'm speculating that as price heads towards the apex of this crossover, I think we'll start seeing which way price is going to end up going. I think the market will start either buying into it or selling off prior to this actual crossover, which is approximately, well, it's hard to say because this is not a time-based chart. So I'm estimating sometime within today's trading session, we should see whether or not the overall trend, this uptrend, will continue, or price is going to get rejected at this yellow resistance level and come back down, possibly retesting 526 support level. So while the overall market appears to be bullish, I am speculating that the next move will be to the downside. So I did take a short position. So this line, this white line, is just a visual markup as well. And here it's I selected the May 31st expiration date, and which is at the close of this Friday's trading session. And relative to the spot price of $529, I selected the $525 strike price. And as a buyer of option contracts and bearish, I'm on the put side. So essentially what this is saying is that on and before the close of this Friday's trading session, I'm speculating the S&P 500 ETF will be at or below $525. So with all that said, switching over to the trade tab, right down here in the bottom left corner are the details to the trade as what I covered on the chart. I did pick up 3 contracts. I thought I would just mitigate the risk because, again, there is that probability that price could continue running higher. So I thought I would just pick up a small number. I picked up 3 contracts. All 3 will go worthless in 3 days. My average entry price has option premium quoted at 80 cents or $80, as each option contract is equal to holding 100 shares. The multiplier is 100. And unfortunately, the trade is going against me as the premium has dropped to less than $72 per contract. And the P&L is reflecting a negative or a loss of $25.50 since entering this trade. So that's the current status of this position. What I'll do is I'll go ahead and pause it here. I'll most likely pick it up heading into the afternoon session. Hopefully at that point we'll start seeing a better view as to whether it's going to break to the upside or downside. So until that update, I'll be back. So, quick update. Today's Thursday, May 30th. And as of the time of this recording, the S&P 500 ETF is quoted at $523.77. And since trading started this morning, the ETF is down a little over $2.38. So this is the current candlestick right here. So as I mentioned in the initial review, I was speculating that price was going to get rejected with the probability that price was going to retest the support level of 526. And since then, price did test it, consolidated, or essentially went sideways, and then dropped again for a second leg lower. And so now that price is below my strike price, I'm going to go ahead and delete this purple ascending channel. It's not relevant anymore. So with that taken away, so now the overall trend is inside this descending channel. So it's pretty close to coming back down to retesting the lower yellow support level, similar to what happened over here, and then there was a bounce. So what I'm going to do is I'm going to go ahead and plan a closing out of this trade. So switching over to the trade tab. So right down here at the bottom, the PML is reflecting a positive balance of $457. It was up a little over $500 a little while ago, but because there was a little bit of a recovery, it's lost about $50. And the option premium is now quoted at $2.28 per share, or $230 per share at this point. And most importantly, these contracts are now designated ITM, or in the money, as my strike price. Actually, the spot price is lower than my strike price. So that's the designation. So again, because I risked $240, I am going to go ahead and close out this position soon, considering there's only one trading day remaining, which is all day tomorrow. So what I'll do is I'll switch over to the option chart specific to my option contracts. So this is the chart for my option contract. So right at the top by the ticker, it's pertaining to the SPY, the May 31st expiration with the $525 strike price, and the contract is on the put side. And the premium is quoted at $2.18. So if I open up Active Trader right now, so if right here by the ticker, it says net position +3. So this is involving my option contracts. So if I scroll down to my entry price, which was 80 cents, it's marked up right here by these two yellow arrowheads on either side of price, which is effectively the zero line on the profit and loss side of this ledger. Now, if I scroll down, my risk is $241 with the fees and all that good stuff. So if I was risking $240, I'm just going to say, considering I'm looking for a 1 to 3 risk to reward, so that would put that to approximately net profit of $720. So what I'll do is I'll go up to $720, which is right here, equal to the option premium of $3.21 for a net profit of $721. So then this would be my 1 to 3 risk to reward. Concerning there's only one full trading session remaining, I don't want to press my luck and expect anything more than that. So what I'll do is best case scenario, I'll go ahead and place an order to close it out at 721, which is right back here at 3. So there's my limit order sitting right there. So if or when price does break above $3.21, then that should fill this order, closing this trade out to my 1 to 3 risk to reward. Hopefully, price does hit that, and we'll see a further decline in the S&P 500. So, for the purpose of time, I'll switch it back to the stock chart. So, here's my limit order sitting right here. So, if price does come down, then that should be enough to close out this trade. So, I'll go ahead and pause it again, and hopefully, I'll pick it up later today and the trade's done, or I may have to hold on to it and hope that there's a continuation to the downside heading into tomorrow. So, more to follow. So the stock market's been closed for 7 hours now. So this is an end of day review on the option trade for this SPY ETF. So today had a strong sell off, and we can see here that price was rejected by this dotted line, which is also acting as another layer of support and resistance. And heading into the close, there were two touch points at the support level of 521. So this was enough to close out my position. So switching over to the trade tab, under the details, under quantity, it's zero. I no longer have those three contracts. And heading into the end of the day, the ETF was able to gain $457. So I am out of the trade. What I'll do now is switch over to the option chart. So this is the option chart, and we can see here that the option contract hit a high of $3.90. Now my limit order was sitting at $3.21. So clearly, this move towards the end of the day was enough to close out and fill my limit order. So if I open up Active Trader, I no longer have a position. Under net position, it's zero. So I am out of the trade. So what I'll do is I'll provide a breakdown on those option contracts, the details when I picked those up Tuesday, May 28th, and then was able to close them out 2 days later for the $720 profit. So I'll switch finally back to the ETF chart. So again, here we have two touches at the support level, so that could be interpreted as a bullish signal, which is some traders would look at this and say it's a double bottom, which would eventually lead to a sort of bounce. However, I would be cautious for being bullish at that point. I'm still anticipating that this downtrend will continue, possibly heading into next week as well. So if there is going to be a bounce, I would be more biased for shorting the bounce, but that is something I'll reassess when the opportunity presents itself. So until the next setup, I'll see you.